breaks, we just shoot money at it. The money, whatever, it gets salted away in the basement of this and that bank, and no problem at all. And so they tried that. And what we saw is, sort of the traditional wisdom resurge. Like, the reason why you can't just shoot $1 trillion at everything that moves is because it's going to turn into inflation. And then once you get that inflation, people are going to get angry, and it's going to cause a bunch of ancillary problems, right? So, the Fed had to hike rates in order to strangle the economy and choke off the inflation. That then sent the banks tanking. We had all those bank crashes last year. So there are just all these problems that dribble out of it once you start getting double-digit inflation. And so now I think they're kind of in a tight spot where for the past couple of decades, and certainly during COVID, they've really just stomped on the accelerator to build out this mega state where it spends whatever it wants. At this point, the federal government is running $2 trillion deficits, for example. We're not in a major war. I mean, we're always at war because we have been for 200 years now, but we're not abnormally at war compared to, say, 5 or 10 years ago. So we're in what passes for peacetime for America. We're not in the middle of a major recession. And yet we've got $2 trillion deficits, which suggests that when one of those two things changes, which, we've got a lot of stagflationary numbers coming in, the Biden administration seems very, very interested in escalating the wars, particularly in Ukraine and Taiwan. When one of those changes, then at that point, we go back to that, sort of direct conversion of deficits into inflation. And I think that it's possible that the system could break on that. What I mean by break is that we could start to get inflation galloping up 10, maybe even more percent. I think 20 is one standard of hyperinflation. A lot of left-wing economists like a number where it's got to be 1 billion percent before it qualifies. There's a major accounting outfit that uses 20% a year. The reason they use 20% is that 20% is when people start doing things differently that make inflation accelerate, right? People start trying not to hold money in their bank account, not to hold money in their wallet, and then it tends to be off to the races. So I think at this point, Washington, it's not just Washington, but also Europe is just very, very reckless. They've kind of grown into being able to spend whatever they want to create any kind of financial crisis and just sort of assume that, they'll shoot money at it. And at this point, the debts are getting so big that it looks like that might not be possible for many more years. And there's a name for this, right? It's called fiscal dominance. When you get to the point where the government debt is so massive that governments lose freedom of action, right? They can no longer bail out Wall Street. They can no longer patch up, the next recession. They can no longer fund the next war. And at that point, I think it gets pretty interesting. That's kind of where the rubber meets the road, and we start to get. It'll be interesting to see what happens then. We've seen this in many, many countries, right? Dozens of poor countries have gone into fiscal crises, and they. Worst case scenario, they shrink down to the point where they can only pay the Praetorian Guard. There is sort of a silver lining there, which is that, if the government completely collapses, then the people have to take over. Neighborhood watches instead of police. You don't have any more regulators. You've essentially abolished the entire regulatory state in one fell swoop because the government's not paying the EPA regulators, so they're not coming out to hassle you. There is a silver lining to it, but it does feel like we're getting a lot closer to that, and we've accelerated especially since COVID.
Hey, do you still have your Bitcoin on an exchange? Don't hold your Bitcoin on an exchange. Take it into self-custody. If you're looking for an easy way to do that, we have the BitKey. BitKey is Bitcoin made easy to use and hard to lose. Take the first step. Get your Bitcoin off the exchange. Check out the link in the show notes. That'll get you 20% off your BitKey, or use the code TFTC20 at checkout. Yeah,
and then you factor in the external variables, which is other countries seeing what we're doing with the fiscal dominance and saying, hey, whether it's fiscal dominance or the weaponization of the treasury market, they're saying, I don't want to buy treasuries anymore. So you have demand for auctions going down, which we discussed the last time you were on. You have the BRICS countries beginning to buddy up, and Saudi Arabia, most importantly, joining BRICS and saying that they're open to settling trades in different currencies outside the dollar. You have what's going on in Japan right now. A major bank there came out and announced that they're going to be dumping, I believe, $60 billion in treasuries over the next year to defend their balance sheet. And then you have the Bank of Japan being the largest U.S. Treasury holder in the world, trying to defend its currency peg, which I didn't check today, but was hovering right below 160 yesterday
Again,
at least.
yeah.
And
Yeah.
like, what happens if any of those things break?
Yeah, so that's fascinating. Pretty much every traditional customer of federal debt is, for one reason or another, not buying, right? So China is preparing just in case the U.S. goes to war with it. A lot of countries are peeling off just because of what we did to Russia, right? We seized the dollars owned by the Russian central bank. A lot of those were in treasuries, right? And so that made the US dollar a risky thing for central banks to own. And so countries all over the world are watching this. The Indonesian president gave a speech at an ASEAN conference for Southeast Asian countries. And he said, hey, guys, you got to, look what happened to Russia. It could be our turn next, right? The US could come and seize the dollars that are backing our currency, and then that would collapse our financial system. So, a lot of countries are pulling out for that. As you say, Japan has just a raft of problems. The Japanese central bank just pissed away, I think it was about 60 billion as well that it came out to, the price tag. They pissed that away trying to defend the yen, and then about 3 weeks later just popped right back to where it had been. So it was completely wasted money. You've got Nordin Shuking Bank was the one that announced, I think it was 63 billion in treasuries that they're going to dump. But there's a lot of banks in Japan that have a lot of issues, right?